Time to get to our Friday trade. Howard Ward, portfolio manager with Gamco Growth Fund. Alan Lancz is president of Allen B. Lancz and Associates, editor of the Lancz.
Let's get to Alan. Alan, what's your view of the markets? Are you as nervous as Howard?
Well, we're trying. Our clients are looking to participate in this market, Simon, without taking the undue risk as valuations rise. And into 2011, we started taking profits in some of the high flyers like commodities. Fortunately, this market has been generous in presenting opportunities in companies and sectors that have underperformed, and high-quality companies that trade at lows that have really presented some bargains for us and done well. Christmas time when we talked about the financials. They've underperformed dramatically. They have done really well. Last summer we talked about Qualcomm near its lows, and it's moved up nicely. Research in Motion in October has moved from mid-40s to, we were taking profits yesterday in the mid-60s. Last month we talked about Microsoft, Cisco, Intel. Yeah. Today, you know, I think we could buy Symantec, which is a leader in internet security. If Intel integrates McAfee's like they planned and like they were talking about in their conference call yesterday, I think it does nothing but increase the value of Symantec. Yet if it takes longer or they're not as efficient in integrating McAfee's, I think Symantec can capture market share and increase their profit margins, which will increase their stock price, which is near historic. Excuse me, which is near historic lows. So I think those are the opportunities you have to look at rather than chasing, you know, the high flyers. And, you know, the market has still presented good companies. We talked about Best Buy last time in the low 30s after selling it in the mid 40s. If investors do that, they're taking less risk and still can participate.
Okay. Alan, thank you. Howard, thank you.
Are there too many bulls out there, and is that a bad sign for stocks? Well, joining us now is Hugh Johnson, Chairman and Chief Investment Officer of Hugh Johnson Advisors, and Alan Lancz, editor of the Lancz Letter.
Well, Alan, this actually sounds pretty good to me. The fact that you do have so much optimism out there is a good sign for things to come, if in fact your valuations are not matching that optimism. Do you agree with Hugh's theory?
Well, I think it's a time to be a little bit cautious. I wouldn't be chasing stocks. I mean, you know, as far as 2 years ago, we were buying Apple and eBay, and last month when we talked, we were buying Microsoft and Adobe because those two hadn't moved, and Apple and eBay had done so well. And I think the smart investor and our clients really propone to this idea is to participate in the market, but not just chase stocks and ride the ups and downs, but basically participate with taking lower risk. And what's nice, Trish, is the market is still offering opportunity. I mean, last month when we talked, St. Joe's was at 17, and it's moved up nicely, and Microsoft, Adobe's moved up. A month before that, Research in Motion, another great company, was in good buying territory in the mid to upper 40s. And now today, Best Buy has gone from the mid 40s to the low 30s. Another great opportunity. Every year since 2003, we've had a chance to sell Best Buy at $40 or $50. So if you can buy it, you know, at $33, I think a smart investor can participate in the market and not take all that risk.
Alan, I want to get over to you because one sector that we did not hear Hugh mention, and it happens to be a sector that you like right now, is financials. Getting beaten down today, leading the S&P a little lower there. Why do you think financials are a good place to be in 2011?
Well, a lot of select financials, Trish, are going to benefit from higher interest rates. So if Hugh's right, and I agree with him what he was talking about as far as for early outlook in 2011, but you still have to be very nimble. But if Hugh's right and interest rates go up, there's many selective banks and financials that will do well in a higher interest rate environment. So we had our lowest exposure into the bond market in our history, and we're participating with the financials that should benefit, and plus their valuations are incredibly low. So with low expectations, again, we're buying it at low values and high upside, and that's what we want rather than the industrials and materials and consumer discretion that's done so well already.
Oh, well, lots of good ideas from both of you. Hugh and Alan, thank you so much. Merry Christmas to you. Thanks for being on the program.